Good morning. Welcome to our first Monday in April. It's April the 6th. Let's start off today looking at oil. Here's a 5-day chart on these sweet light crude futures. And you can see that we're still up over 5 days. We're down a teeny bit from where we closed last Friday, but nothing huge. There still isn't too much moving through the Strait of Hormuz, just a little bit of Iranian-controlled and sanctioned ships. Now, over the past week, President Trump has made it clear that America is not going to be the one to bust up whatever remains in Iran to stop, that is, stopping this flow of oil. We're going to let those who depend on it, those who need that strait to flow more than we do, we're going to let them take responsibility for doing it. There was a credible threat of development of nuclear weapons. We eliminated that threat. We did a lot to take out their ability to attack and to defend themselves. Not completely annihilated it, but took out a lot of it. And so now he's telling the rest of the world to take responsibility and not just leave it all to America. In the meantime, he has alluded to America being willing to sell oil to the rest of the world. Hopefully that won't outstrip the capacity that we have. Time will tell. But that's where we're at. I don't think that we'll see the price of oil come down to where I would like it to be. I'd like it to see it come down into this range here. And that's not going to happen until oil starts flowing through that strait. And at the moment, it looks like that's not going to happen until either Iran needs the money so badly that they open it up and start letting more ships through, whether they charge them a fee or not, or the rest of the world says, okay, we're going to have to solve this ourselves, and takes it upon themselves to open up that strait and get oil flowing again. Now, if the rest of the world does come to buy from the U.S., they're going to be paying, these inflated prices. So I would have rather that everything was solved peacefully without so much destruction and loss of life. That would have been my first choice. But I'm having a hard time saying this was a bad move. I'm having a hard time saying this was the wrong thing to do. So back to the stock market and a day chart. My favorite chart here. The S&P futures, and I've got it on a 1-year chart. We have dropped off all of the fun that we saw from the tariff tantrums of last year. We're just to where it bottomed out and started to give us a nice run up. Are we bottomed here? Well, no one knows for sure, but I think there's a good chance that we are. I think there's a good chance that this was the bottom. You can see we kind of had a tweezer bottom here with the low of the wick on both of them. So there's a very good chance that we have hit the low, but certainly not a guarantee. If we do break lower, I'll acknowledge that I thought we were going to be at our low here, but I won't be completely surprised. Now, if we do break this, it'll probably happen sometime in April, and that might make it more difficult for us to get back to an all-time high. But I still think that oil will flow through the Strait of Hormuz, certainly before the end of the year, hopefully much sooner. President Trump thinking that it might happen automatically. I think he threw out 20 days. That might be a little bit optimistic. But I do think it will happen, whether it's 20 days or 6 months from now. But it may not happen in time for us to break to all-time highs this year. We'll just have to see. On the interest rate front, we're currently with a target rate of 3.5 to 3.75. And let me scroll down a little bit here. Notice this 99.5. Just a token, a trace amount that we will go up, not down. Personally, I don't think there's any chance of it at all, but we'll see. We are 23 days, a little more than 3 weeks out before it happens. So we'll see how everything plays out. But I would be very surprised if we see any change at all based on the picture we see right now. Now, even though this isn't the biggest driver of the markets right now, last Friday we did get some pretty good news. Let's start with Thursday though. Our initial jobless claims expected to be slightly up, came in about 10,000 better. But right here, the employment report, the employment rate down, number of new jobs added, much better. 120,000 jobs better. So there really isn't any need to stimulate the economy. We'd love to have it. Well, if you want the stock market to shoot up and not have too much in reserve, if you will, to make adjustments down the road if needed. But there really is not a need to cut interest rates at this point. And so I don't think it's going to happen. I don't think it's going to happen. We'll wait and see what employment numbers, what inflation numbers come out next. As of right now, I don't think that they're going to be incredibly bad. Couple of vacations that I was going to take are going to cost a little bit more. Hopefully oil prices will come down a little bit and gasoline prices in the US will come down a little bit. So today's best guess is that we continue to work our way up from here, and as oil comes down we begin to be stronger, and if we can see oil get back down to even the high 70s, I would expect those new all-time highs. Right, that's it for today. Good luck out there.